Well, what I would say is I think we first have to remember that real estate as a real asset is kind of, I'd say, purpose built for an inflationary environment, because as costs to build grow higher, that means existing assets are worth more. The thing, though, is when you think about how do you value assets, it's really two variables. It's your cash flow times the multiple you can put on those cash flows. And so what you want to be able to do is grow those cash flows. And if you have long lease durations, it's kind of like a bond in an environment like this. Very tough to hold and grow value holding bonds in an inflationary environment. So we're trying to get at those assets where we do have shorter lease durations. As rents go up, that we're able to capture those, and the shorter lease durations help us do that.
Okay, so let's drill down and take a closer look at your top sectors in bricks and mortar and real estate: logistics, rental housing, hotels, life sciences. Let's start with logistics. I guess it's got to be a play on, at the very least, warehousing, right, on the back of continued supply chain kinks to do with the war in Ukraine, possibly COVID as well. And is this based on the assumption or the bet that neither of these things are going to unwind anytime soon?
Well, as I mentioned, across all these sectors, we're seeing some of the strongest fundamentals we've ever seen. And Blackstone has been investing in warehouses in a major way, really since the global financial crisis. Today, we own over 1 billion square feet of this space. And what I would say is what we're finding is that tenants are trying to get as close in as they can to the most rooftops as possible. And this is being propelled, as you noted, by realignment of supply chains, trying to make those operations much more efficient, and of course growth in e-commerce, which we continue to see strength in. And so I think what we're finding is these fundamentals are strong because, particularly in those areas that we focus on that are the closest into dense population centers, you have very limited new supply and strong rates of demand. So that's leading to frictional levels of vacancy, very strong rent growths, and we feel there's a lot of strength continued to go in the logistics space.
Got to ask you, Kathleen, what about data centers and server farms?
Well, that is another sector where we see a lot of growth. And if you just take a step back to our style of investing, what we try to focus on is what is happening in the world in terms of the way people are living, working, spending, traveling, and now utilizing data, and which are the assets that are going to benefit from those. And what you've seen with roughly a doubling of data consumption every 2 years is that there's strong demand for data center space. And actually, we were able to purchase one of the top companies in this space last year. And what we're seeing is really record demand for the space and very strong performance in that asset class under our ownership.